a bearish market all through this week with little or reduced appetite for T-bills and bonds. We've seen most players on the sell side. As a result, yields have gone up. And it's only today that it was a bit tepid with few buys, but all through the week it's been mainly sells.
I understand that yesterday there was an OMO repayment of about 268 billion. That pushed up market liquidity to over 300 billion for today. What can you tell us about that? And I know today is Friday, and we probably won't see any OMO mop-ups by the CBN until next week. The OMO repayment yesterday pushed liquidity up. On the previous day, the OMO offered for sale was a no sell as the liquidity providers stay quoting high, and the CBN stopped that sale. But as it is now, people are still more on the sell side. That's liquidity is king right now, so people are actually, unless they see higher yields, they're not going to be ready to buy. Well, I thought we saw higher yields sometime this week, especially on the short end of the curve. I thought I saw, was it on a one-year T-bill, rates between 13 and 15%. I know that did go high this week. What can you tell us?
Yes, that was as a result of the little or no interest in yield in T-bills or bonds by the portfolio investors. So as a result, the market participants were increasing the yields to try and offload their position. So that was what drove rates that high earlier on this week. Okay,
finally on the bond and the T-bill space, tell us what we can expect from the yield curve for the new week. We saw it flatten pretty much this week, but what can you tell us in terms of your forecast for next week?
I expect an upside on the yield curves as market participants will continue to quote higher and higher for every bid auction, trying to push rates as high as possible to retain funds in the system and keep the portfolio investors in rather than the flight for dollar.
Speaking about dollar, let's move over to the FX markets now. The INE market, we saw it rising from a comfortable 362 level to as high as 365. Talk to us about that.
On the INE market, we've just seen increased demand all through the week. We had we saw a high of 365 as portfolio investors are still trying to pull out, and the supply has reduced, so rates are pushing up to make up for the supply.
When you say supply has reduced, are you referring to the CBN's weekly interventions?
No. The CBN weekly intervention has remained constant all through. CBN continues to defend on their own parts, that's using the retail and wholesale. But on the INE market, which was mainly dominated by foreign portfolio investors' inflows, we've seen reduced inflow into the country, and as a result, and pent-up demand for investors trying to leave the country. So as a result, we've seen rates go higher and reduced supply.
Okay, from the CBN end, going into the new week, do you see the CBN being able to withstand this pressure and give, all segments of the market and provide ample supply to the market?
Yes, the CBN has so far defended the naira well, and so I don't see them winning right now. With reserves over 46, we still see enough shock absorbers for the defense of the naira.
For the INE window, if we saw it go as high as 365 this week, what are your forecasts in terms of, whatever pressure comes to the market or that segment of the market, where do you see rates trending?
On the INE market, I think that the rate of 365 would probably cap it for next week. But I've heard that there's also a bit of supply in that market right now. That's why the rate hasn't trended much to 367.
Now, for the FPIs, we continue to see more pressure. Do you think that this pressure could increase in the coming week?
Not right now, because the selling on the bonds market has reduced. So it's not a case of there is new FPIs that are desperate to go out. So we just have more of the backlogs to deal with rather than fresh demands.
All right, Deinma, thank you so much for talking to us today.